this. Okay, I think, can you see that? Can you see that?
Yep.
Yeah. All right. So I think Rakil touched on a lot of topics already. I'm going to go through a little bit of items as well. I think a lot of times, and this is something that, Rakil touched on, it's not necessarily your analysis that's hurting you. And Rakil said this like countless times. It's like, how many times have you done a trade and it's been good? You've profited, or how many times has your analysis been correct? But really, what's going on inside your head? And I mean, it's funny because when you hear a lot of people talk and, like everyone gets upset and, they say, okay, and, you can see it online and through social media, everyone goes through it. It's like, okay, well, this person's demo, this person doesn't know how to trade. I hate this person. There's so much negative energy, and I don't like really, blaming people, but it's more of introspective. Like, you have to look at yourself. And as sucky as it sounds and as stupid as it sounds, it's a maturity thing. It's a way of thinking, and it's not an excuse. So a lot of people look at this and they'll say, we're talking about psychology, we're talking about all this stuff. It's an excuse because then you have no one to blame but yourself. But when you think about it, a lot of the decisions that you make as a trader, you're doing that on your own. Like, you're making the conscious decision to trade a $500 account, a $1,000 account, whichever account that you're trading, you're making that conscious decision. Nobody's forced you to do that. The argument then becomes, well, I saw so and so on social media make all this money, and I believed if I follow them, I'd make that money. But the problem is, you're not that person. And this is the hardest thing that you have to learn as an individual. And I think when the most successful traders have grasped this concept, and people who do become successful, and there are a lot of successful traders that have come from, Rakil's group, from my group, from Alex's group, from anyone's group, have realized that they individually have to find something that works for themselves. You can't turn around and copy people. You can't turn around and say what's happening. So, I mean, this is sort of what we see, and what we see in social media, and why everybody's here right now. People turn around and they see 4, 5, 6-figure traders, and then everyone starts to chase that strategy. And it was something that I actually posted yesterday about too, is, the reason why, like, a lot of people say like Forex is toxic, or any sort of financial ideas are toxic on social media, is because people are only showing one side, or they're only showing a glimpse of what something is. They're not giving you a full perspective. And once someone gives you that full perspective, it's up to you then to take that and do what you need to do with it. If I look at myself, being 6'4", am I able to play in the NBA? No. Can I play basketball though? Yes. So I have to be able to determine that same ideology with trading. Maybe I'm not going to make 6 figures in my first year. Maybe I'm only going to make 5 figures. But understanding where you're going to fit in the pecking order according to what you're doing is so much more important than actually doing things or saying or looking at what other people are doing, because we don't know what everybody's doing in social media. We don't know where everybody's backgrounds come from. We don't know where everyone's financial situation's from. So you have to strip that noise apart, and what you should be doing is understanding what you need to do to get to where you need to be, and speaking to those people who are currently doing what you want to do. Not copying what they're doing, but understanding what steps they took to get to where they needed to be. And you have to then apply those concepts to make sure that you can then get to where you need to be. If I turn around, and Rakil said the same thing, if we turn around and we look at the Asian Open and we say, okay, every Asian Open, this is what's going to happen. Nobody can tell you to click the button. You have to click the button. You have to be able to hold the idea of the trade. You have to be able to execute the trade. You have to understand when to close the trade. Your risk tolerance is different than my risk tolerance, and which is different than the next person's risk tolerance. And that is the biggest misconception we've had in Forex, I think, in the last, say, 2 or 3 years. And it's the reason why, when I talk to people, I don't really talk too much about analysis anymore. And people really get upset with me because, you'll message me on Instagram or you'll message me in the groups and you'll say, Ted, I think blah, 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 blah. And I'll get like a 3-paragraph synopsis of what's happening. And I'll say, I agree. And people get so frustrated about that because they'll say, well, Ted, you only gave me a 1-word answer. I don't think you're paying attention. No, you've given me so much detail and so much thought process. You've shown me you have critical thinking skills. You now have to execute on that. What do you want me to respond to? Yes, I agree with the fact that USD JPY is at the 50 EMA on the daily, blah, 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 blah. Like, that's not conducive to your learning. I don't need to regurgitate what you just told me. You are coming to me, or you're coming to Rakil, or whoever you're speaking to. You're coming to them for guidance, for support. This is the answer. It's a yes or no answer. Will we go up or down? Yes or no? What should we be looking for? I'll add some context. I'll say, be aware of this key level, or be aware of this. But for the most part, everybody sees the same thing. So when we look at what we want to talk through and what we want to talk is, let's talk about what Forex trading actually is, what institutions do, setting yourself up for success. I mean, and Rakil talked a lot about these, so I won't really I'll push through these a little bit faster. Who you are as a person, and talking about failure. And I think this topic is a key topic that people just don't want to accept. They don't want to accept failure. They look at failure as an embarrassment, or they look at failure as, you weren't able to succeed. They don't look at failure as an obstacle. And, something that I did say yesterday in my group chat, people were talking about demo trading versus live trading. I did the comparison of, when you first started walking, if you watch a toddler walk versus how you walk, you wake up in the morning, you jump right out of bed and you just start doing it your day. You don't even think twice about moving your legs. It's innate. It's subconscious. It's something that you know how to do with just, with your eyes closed. You can walk around with your eyes closed. You'll bump into things, but the physical action of walking happens very, very easily for you. But if you watch a toddler, you watch someone who's, just starting to learn how to walk, what are they doing? They're staggering around, they're falling, they're getting back up, they're bumping into things, they're holding on to things. You have to apply that same common sense and that same degree of progress to when you're trading. You can't just jump from one thing to the next and be like, well, I'm not doing well enough on a $100 account, so I'm just going to wait to save $10,000, and then I'm going to trade a $10,000 account because I'm going to make more money that way. It's just not going to work. So when you look at the overall picture and when you actually review what you're doing as a trader, this is sort of your mental mindset that you have to be in, and you have to accept it. You just can't turn around and deny these things. If you're going to the gym and you say to yourself, I want to be able to, in the next year, bench 225 pounds, or, like basically 245 plates on each side. You can't go to the gym and you can't start lifting, half that weight if you've never gone to the gym before, just because you want to get there faster. You're going to hurt yourself more than you're going to help yourself. So, what exactly is Forex trading? Rakil touched on this. It's buying and selling currency contracts. I think this is the biggest thing. And now, me owning a brokerage and me fielding questions about spreads, liquidity, this and that, the simplest concept you have to understand with Forex is there has to be an opposite transaction for your transaction to complete. And when you're on a demo account, those transactions always complete because it's demo. There's unlimited liquidity. There's always availability. If you're on a brokerage that has a B book where they're making the market and they're not sending your order into the marketplace, it's always going to complete. It's always going to be instant. You have to understand that in the real world, institutions deny prices. They change prices. What one person may get, the next person may not. This is such a simplistic concept, but it's so overlooked because when people start trading, they just assume because there's a buy order and they click close that it should close automatically. That does not happen in the real world. Forex is a auction market. And what I mean is there's always a bid and an ask price. And that's simple. You see that in your terminals, bid and ask. It's basically what I want for this price I need to close, or what I want for this price to open. That is what you have to realize as a trader, is you're in a market, and if you're on an A book brokerage, you're not going to get the price that you think you're going to get. There might be a 1 or 2 point change. The spread might change instantly. I watch it, like when we see the flows for liquidity that comes through the brokerage, I see flows change, like 0.1, 0.2, 0.3, 0.4 points in a split second. And I don't even understand it. I've been trying to learn, why does it change in that split second? When the market closes for a session, there's a huge spread jump. These are simple concepts that you have to understand as a trader, and you have to accept. You are a small fish in a big pond, and you have to accept all these little nuances, that maybe your trade's not going to close at the price that you want, that your stop's going to get hit with a spread jump. It has nothing to do with the brokerage. It's institutions and their movements and what they're doing. And it's also, too, where you place your stops. If you place your stops right in a price zone, expect them to get hit, because there's spikes. Institutions are always trying to get the best price, and they're always trying to make sure that they are winning the most. So you have to accept that as a retail trader. And if you're practicing risk management and you're focused on your daily goal or your weekly goal, these things are just normal occurrences. I mean, I can give a perfect example. The other day I took a trade with the pound JPY, and it looked like we were going up to, I think it was 152,600, and we were at 152,500 or something like that. And I took a trade, I took an entry, and literally in like 30 seconds it dropped like 9 pips. So am I supposed to be upset about that? Am I supposed to turn around and be angry? No, I had an idea that we were moving up to that level, which we eventually did about an hour later. But you know what? The market decided at that point that we were moving back down to get a premium price level, and I got caught. My risk management was okay, so I closed the trade, I take a loss, I look again for the next time and look for another trade. A lot of people, when they see those kind of instances, they get frustrated. I look at it as, well, I had the idea, I had what I wanted to do. It didn't go my way, but in probability, in understanding the context of trading, how many times is it going to go right for me? And I know more than likely it's going to be right. And I looked an hour later, and it hit my price, my take profit point. So lesson learned. You know what? Maybe I should have put a pending order a little bit higher, or maybe I shouldn't have even traded at that point. So you know what? I make a note on my journal and I carry on. And that's what you'll have to do. You have to become numb to the fact that the market's going to do shit you're not going to like. And you know what? Accept it, make notes about it, and just carry on. And really understanding what Forex trading is. And like I said, it's financial gambling. I think this is the funniest thing when people used to tell me about, I play poker and I'm gambling at the casino. What am I doing? Well, you're doing the same thing in a market where people have unlimited bankrolls. You don't know who the big players are. You don't know what they're thinking. You don't know what they're doing, and you're trying to make a bit of money. It's all based on probability. It's all based on how many times over the next 100 trades is this kind of idea going to work for me? And that's what backtesting is. When people start asking me about backtesting, or they start talking about how do you become profitable, it's understanding that you're going to look for the same idea over and over again, various permutations of that idea, and permutation, the word being different instances, right? So if we're looking for the Asian Open or the New York Open, and we say to ourselves, okay, I want to trade at that particular point. Sometimes that trade will not happen at that particular open. Maybe that trade happens an hour before, maybe it happens an hour after, but the idea is similar. I'm looking for a breakout. I'm looking for a continuation. I'm looking for a reversal. It's the same idea, but you have to be able to apply it in various instances that may not happen at the exact same time. Because people turn around and say, well, Asian Open today was boring. Well, yeah, but an hour before that, we had the move. Where were you? Oh, I was waiting for Asian Open, because that's when the market opens. Right. But you as a trader have to understand that you're not going to see the exact same thing at the exact same specific time. It's going to be a variation of that, and you have to apply your knowledge to ensure that you are making a proper decision. So let's talk about the basics. Similar to what I was saying before, you have no control on the outcome of your trades. I know you want to pray and wish that the market moves in a certain direction, but you have no control. The only thing you can control is your risk management, and that is going to be your best friend. And if I can tell you one thing, the people who fail in Forex are the people that over leverage their account, they have poor risk management, and they don't know how to control themselves. Those are the losing traders in Forex. The winning traders take their time, grab their little bits, and that's it. When we look at probability and we start talking about probability, is, no matter how right you think you are, the outcome can still be wrong. You can still have a stop hunt. You can still have them trade go the opposite way. No matter everything that's pointing to that direction, you could still have it work out not in your favor. You have to accept those opportunities, you have to accept those consequences when you're accepting the opportunity to take a trade. Getting rich overnight doesn't happen in Forex. It's a grind. If you think you want to get rich, play the lottery. That's how you're going to get rich overnight. Forex is not something that is going to make you rich overnight. You are not a professional. You do not have enough information at your hands, even through education, through mentorship, through everything, to say that this is what I'm going to be able to do. I mean, I have 13 years of experience in the industry, and I traded for 3 years, and I'm still not a professional trader. I'm good at what I do because I recognize patterns. I recognize reoccurring themes. I recognize scenarios that I've seen before, so I can adapt and adjust. That's what you have to do as a trader. Do I still have losing trades? Of course I do. Everyone has losing trades. It's a part of what it is, but it's understanding why you take those losses and making sure that those losses don't happen again. Or if they do, you know when to minimize those losses. It's been, countless times when we've looked at a trade and we can all sit there and say, okay, this is not going to end well. It's time to exit. And you know what? A lot of times when you exit, you're like, oh, thank God I exited. It didn't go my way anyways. And a lot of times what will happen is you exit early and then all of a sudden the trade just takes off and you're like, oh, I wish I would have held. You have to be just conscious of the decision that you make at that specific time with the information that you have at that specific time. You can't go back and say, well, I wish I would have done something. No, at that specific time, this is what the markets were telling you. This is what the markets were giving you. And that is what you made or based your decision on at that time. There's nothing wrong with that. And that's another key as you start trading, is understanding that it's okay to close trades early. It's okay to, before it hits your stop loss, to close the trade. There's nothing wrong with those ideas. The problem is when you start harboring or you start, what's the word? Like you start second guessing yourself or dwelling on those ideas, that creates a bigger problem in your head, because now you're always going to be worried about what you just did. Each trade is independent of the previous trade. You have to remember that. It's like when I play poker, if I lose a poker hand, I can have a pair of aces and I can lose that hand. The next time when I come to the table and I get a pair of aces, I'm not going to be thinking about why I lost that previous hand, because this is a new hand. This is new people at the table, new dynamics, new day. Everything is different than the previous scenario. It's the same principles that apply with Forex. Forex is a long-term game. You have to be able to understand that each trade is independent of the previous one. And if you can't control that, when you start trading, take one trade a day, call it a day. Whether it's a win or a loss, just stop. Because you're not at the mental mindset to say, hey, I just took a loss. I'm okay. I'm going to carry forward and I'm going to take the other trade. Or I'm not in the right mindset to turn around and say, hey, this isn't going to work for me at this point. So how do I succeed in Forex? You join an education group. So you're here at the signs. You're going to be working with a whole bunch of people. Ask a lot of questions, read, practice, experiment. These are all various elements that you'd want to work through and that will help you progress. How do I fail? This is the biggest thing. When I hear people talk to me about how they haven't progressed, these are some of the key things that people have done. They sit by themselves and they sit, they turn on a bunch of webinars, they read books, they do all this analysis all by themselves. And they think that they're going to sit there, they're going to absorb it by osmosis, they're going to have it come into their head, and they're going to be able to do this. Or they turn around and say to me, Ted, I just watched every single webinar. And I said, you just wasted like 72 hours of your time. The idea behind reading or watching webinars or reviewing documents or things like that is for you to scan the information, go through it, and pick out points that relate to how you're trading. Because not everything in every book is going to be beneficial for you. So someone who says, Ted, how many books did you read? And I say, I read about 15 to 18 books. And they're like, oh, wow, you must have a lot of information. No, because I wasn't reading every book page for page. I was skimming the books. I had a list of information that I was looking for, and I was looking for that information in those books. I was taking bits and pieces of those various books and formulating my own ideas. It's the same thing when you watch this webinar. Maybe there's key points in this webinar you already know, and you're like, well, Ted, you're talking out of your ass. I don't need to listen to this section. But then there's other parts you're like, hey, I didn't know that. That's something that I can apply to what I'm doing, or that was a missing link to what I've been doing. This is how you study. This is how you progress. This is how you become a trader. You don't sit there and read 20 books and say, okay, I know everything about price action. That's fine. That's not the point of studying. You're not taking a test. Nobody's going to ask you, what does an engulfing pattern look like? Nobody's going to write that on a piece of paper. You're not going to make money by knowing on a piece of paper what that looks like. You have to understand how that relates to the market and what it's doing in the market and how you're going to be profitable or how you're going to be able to minimize or preserve your capital. That is what you're doing. You're taking information and you're applying it. Similar to when you do math, if you're in a math class, you look in the back of the book, the answer is so easy. Oh, I knew that answer. Oh, man, 2 plus 2, 4. Oh, man, you know what? I knew that. And then as soon as someone turns around and says, what's 200 plus 200? Now you're sitting there and saying to yourself, oh, well, like nobody told me about this question. How am I supposed to do this? I don't know how to do this, because now you don't have the back of the book. It's the same thing when you're trading. Well, how was I supposed to know that was going to happen? But did you look at the higher time frames? Oh, no, I forgot. I didn't prepare myself. That's exactly the point, is applying the information. As you become a more competent trader, as you gain more experience, the information that you apply becomes subconscious. I know my rules. I know I look at higher time frames. I know I look at the specific times of a candle. I know I look at specific hours of the day. I know I look at specific sessions. I know I look at specific pairs. I don't have to remind myself of that anymore. That's just an innate ability that I have because I've created a routine for myself and I've applied the information that I know. I don't turn around and trade USD ZAR because somebody else is doing it. I don't care what it does. I don't know its habits. I don't know what the probabilities are. I don't know what it does. So therefore, that does not help me. So you as a trader, this is exactly what you have to do and how you have to work through things. So, how do I become a great trader? And I mean, everyone always asks this. This is the same thing people always ask about, is how do I become a great trader? Ask questions. Don't be afraid to ask questions. And this is the biggest thing people say is, I'm afraid of looking stupid, or I'm afraid of making a mistake. You're in a safe environment. You're in an environment where everybody wants to succeed. So nobody's going to laugh at you because you asked a question. They're going to question you on your question, or they're going to try and give you information, but nobody's doing it in a way that they're trying to hurt you. They're trying to help you. And this is the biggest hurdle a lot of people have, is that ability just to go into a chat room and say, hey guys, I know fuck all. I need some help. Give yourself the opportunity. You're paying money to people. You're paying money for courses. Whatever you're doing, you're allotting time. You're using up your own resources, and you're wasting them by not doing that. And I always laugh at people when they come up to me, and it's funny because I always look at the chat room. I try and picture the chat room like a big table, like a big dinner table. And I always feel like I'm watching, what's that little movie with Timmy, where it's like, please sir, can I have some more? And it's, I sit there and I laugh because people are coming up to me with like their hat in their hand and like they're rubbing their feet together, or their head is down. Well, I don't want to bother you, Ted. Well, what do you think I'm here for? I'm here to help you. Rakil's here to help you. Everybody that you're working with are here to help you. You're not bothering somebody. I've always said, if people message me, sometimes I might not be on my phone or on my computer. So, you leave it there. I get the notification. I'll eventually get to it and I'll help you. Sometimes if I miss it, you message me again and say, Ted, you forgot this question I asked you. Can you go through it? And I'll definitely get back to it. Like, we're human. We're working on multiple things. I have a lot of projects, but I don't ever expect somebody to say, hey, I don't want to bother you. You have to bother me because you want to progress. That's the sign of progression, that you're hungry to learn. When you ignore or you hide or you're sitting there and you don't want to talk to anybody, and then you come to me and say, well, I just lost like 10 trades in a row. I can't help that. I can't help you do that, because essentially what you've done is you've taken it upon yourself to think that you can do it on your own, and then you come and complain to me when things aren't going that right. And it's the same thing what happens in Rakil's groups, anybody else's groups. So if you're going to be that type of trader, you're going to fail. You have to want to learn. You have to basically think of yourself walking through a crowded room naked. That's how you have to be when you're a trader. You have to basically be naked, hang your balls, hang your tits, hang everything out and say, listen, I just want to learn. I'm okay that my balls are small. I'm okay that my tits are too big. I'm okay with all this. I just want to learn. Can you help me? Because eventually I'll be able to have plastic surgery with all the money I make from Forex. I'll be able to resize my tits, grow bigger balls, get a butt implant, whatever I need to do to make myself look better. But at this point, I'm willing to look like shit so that I can eventually progress and get better to where I need to be. And that is what you need to understand and really take to heart, is everybody's here to help you and you have to work at it. Dedicating your time. You know what? People say we don't have time to study. You don't have time. Read something as you're eating. When you wake up in the morning, I used to, on my way to work, I used to read on the train. I would read like a couple of paragraphs. I would play a game, guess the direction of the market. I would do things where I only had a few moments to work through. And at the same time, don't overdo it. People turn around and say, okay, I'm going to go study for 2 weeks and I'll see you later. Your mind can't take that. It's like going to the gym for 5 hours. Really? I see guys that are there for 2.5 hours, and it's like, what are you doing more than the other person is doing that's only there for 45 minutes or an hour? It's, they're busy talking, you're hanging out, they're resting too much. They're not really engaged in the workout. They're just there to socialize. So don't do that with Forex. You know what? Do it in spurts. Put yourself in a position where you're going to learn at the maximum or the best time to learn, and then take a break. You know what? Just learn and relax, and that will definitely help you as you go through. Sorry, just going through the chats. Okay. How to study. Okay. Same thing. Ask questions, write notes, ask questions about the notes that you're taking. You know what? Be active. And a lot of people, I find that maybe we didn't have great study habits in school, or maybe you're still in school and, you just want somebody to spoon feed you. You're not going to remember everything someone says to you. And that's the biggest thing. So sometimes you have to turn around and, be active in that. Maybe Google a question before you ask the group, because that'll improve your critical thinking skills, and maybe you'll have more information that someone else couldn't give you. Or maybe you Google the question, then ask the question in the group and say, hey, I read this information, and, do you guys believe this is correct? I read this somewhere. Not instead of saying, what time does Asian Open start? Why don't you Google that and say, okay, you know what? I'm reading conflicting things. I see Asian Open opens at this time, but this one says this time. What is the right time? Is there a range? Like, what are we doing? Similar to that. And when you provide information, talk about what if session, like what if scenarios. Give ideas where there's progression, where we can start discussions. And that it will definitely help you as you progress. How not to study? You jump into the chat room and just sit there and read. You stay quiet, or you just copy somebody else. You don't want to be in that position. You want to be active. You want to be part of something. The biggest or the best traders, what they have in common is they ask questions, they studied, they built a plan and a structure for them, and they didn't care what anybody else was doing. And I always laugh at people, and like it's the same thing on social media is, everyone starts yapping and they're so busy with everybody else, but the most profitable traders are sitting back doing everything every day, the same thing, and they're ignoring everybody. I don't care what everybody else is doing on social media. It's a joke. I use social media as a time for fun. I laugh at people because I see all this time everybody's wasting, and everyone's pointing fingers here, or talking about this analysis or saying this, and I'm sitting there laughing because I'm looking at them saying, how many of these people this morning actually profited in a trade, or actually took a trade and actually did something productive? And chances are it was none of them. None of them did that. And meanwhile, I'm just sitting there doing my games. We do these daily webinars, as a group. We sit there and laugh. Everyone takes trades. Everyone's profitable. Everybody's earning. And then there's people out there that are so angry, that are, trying to talk bad about this person, trying to make this fake account. And I'm sitting there and I just laugh. And people ask me, they always say to me, Ted, does this bother you? I said, no, it doesn't bother me. I sort of feel sorry for people, because it's like, I'm sitting in my glass house and people are throwing stones at it. And it's like, you break my glass house, I just go buy a new one because I got lots of money. And when you look at stuff like that, and you examine what people are actually doing, it's like they're wasting so much time on other people that those other people don't even care about them. And then when you look at the best traders, they just sit there and laugh. They do their thing over and over and over again. And you need to become in that mindset, and you need to drill that in. And I'm not saying you can't have fun on social media. I'm not saying you can't engage in others, but make sure your priorities are there, that you're progressing before you're off doing it. It's sort of like when you're playing a sports, you're in a sport, right? And you practice for 2 hours, or you have a game for 2 hours. At the end of the game, yeah, of course you're going to go out and have a beer, or you're going to go out and have a drink, and you're going to celebrate with your team. It's the same thing with social media, I find. I'm busy working. When I'm done my work and I've got time, sure, I'll have a great chat with everybody. I'll debate for hours with people online because I've already done my work for the day. I've already succeeded in what I needed to do. I completed my tasks. I'm happy with my progress. So now I can have fun and I can do other things. Let's talk about institutions and, sort of what they're doing to my account. Because everyone talks about this. Everybody wants to talk about institutions. And, everyone's always like, oh, institutions do this, the market's manipulated, all this other stuff. And, not a lot of people understand exactly what institutions are. Institutions, we group businesses, banks, governments, all institutions, because they move the market. The currency exchange market, Forex, is moved by economics, by businesses, by all these various items that are a lot bigger than us. And that's what you have to remember. So, people always ask me like, oh, why did this currency pair drop? Or why did this currency pair go up? You have to realize that banks, businesses, governments are all involved in that. So whenever there's a monetary policy from a government comes out, currencies switch. Bank rates change, currencies switch. Businesses have bad days, currencies switch. There are so many different ideas here. You have to understand what they're doing at a high level. You don't need to know the specifics, because if you dive into the specifics, you're going to spend hours as an economist and you're not going to get any work done. When you look at institutions, they're large whales. So in the gambling world, whales are people who spend lots of money, and they actually, they gamble heavy, they move big amounts of money in the casinos, and they can break the casinos. Similar to the trading world, they move in slow patterns. They're very methodical, and you just don't want to get caught in their way, because when you go against the trend and they're pushing hard, you're going to blow your account. And then people always turn around and say, and this is what I always enjoy hearing from people, well, if you're such a good trader and you're making 100% returns a month, why can't you go work in an institution and do that? It's quite simple. Institutions can't trade like retail traders because they're too large. You can't throw $1 billion into the market or $2 billion into the market and take a trade without the market moving. Okay? You can throw your 100, your 500, your 1,000, even your $1 million into the market, and you're probably not going to really move it too much. But when you get into the hundreds of millions, the billions, you're going to start having a little bit of an effect in the market and the way liquidity is shaped. They have different risk parameters. You're sitting in an office all day, go tell your boss to fuck off, right? They're going to kick you out of your job. You can tell the charts to fuck off all day because they're not going to bother you. You're working for yourself. They have too many rules. There's too many things in place to stop them from trading like us, from making abstract moves. They have to make moves that are in the benefit of the shareholders, benefit of senior leaders, benefit of management. And at the end of the day, they don't want to lose their job. So they have to make sure they take proper ideas and they're a little bit less risk adverse. So how do we take advantage of institutions? And, like sort of what Rakil said is, watch the patterns, stay away from the news, trade with the trend, and enter and exit trades when you feel comfortable. And I think Rakil touched on this a lot is, following what makes sense for you and understanding that will give you a greater opportunity to know what we want to do. How do institutions take advantage of us? I think this is something that's not really touched upon a lot. They know what we see, okay? Institutions are well aware that everyone uses candlesticks, okay? Institutions don't use candlesticks. They use price, they use volume. They don't have a chart in front of them with indicators. They don't have these patterns. They're looking at specific price levels, and this is what you have to understand, is you have to look at it and say, what do institutions know about retail traders? They know we are watching them. They know that, when the market opens today, people are going to try and take trades, because we see a particular level that we're going to go to. Institutions aren't going to let you get to that level until they're happy with what they're doing. So you have to be aware of that. You have to avoid their traps. And it's not really a trap. It's just common sense. I mean, when people laugh and they say, you buy support, sell resistance, it's exactly what you're supposed to be doing. And when people say, like I sold support or I bought support and it went further down. Well, did you wait for confirms to buy from support? Oh no, I didn't look at that. It's just always, you just sort of buy support all the time. Or, I sold that resistance and it just kept going up. It's like, well, did you wait to see that we were moving? We tested resistance and broke? No. Institutions know that. Institutions know when we get at key price levels, everyone's going to be jumpy because they're going to say, oh, wow, gold's at like 1340. We're going to 1352, guys. And everyone's going to jump on the buy bandwagon. They're going to be like, no, we're not ready to go there yet. So we're going to drop it down to 1330, and then we're going to go up to 1352. You have to wait for confirmations. So when people say, oh, I just got stop hunted or I just got this, it's like more than likely you probably got into the trade early, and you know what, you just got pushed the wrong way for a bit. And you know what, risk management states you have to leave the trade. It's not a big deal. So when you look at institutions, you got the us versus institutions. Now, when you look at this, do you see a problem? Look at us. We're just all these regular people, like we're all happy and stuff. Look at the institutions. They're well-groomed, oiled machines. These are things, they are not here to have fun. They're not here to be friendly. They're here to grab all your money. So when you turn around and you look and you say, man, I got to go after these institutions, you're going to end up trying to go after them, and you're going to see exactly what's happening in American Gladiators. You're going to be like, wow, I'm in a big load of shit. And, when you go and you finally win, you're like, yeah, we won the trade. We got out of the market. We were successful. Okay. So how do we do that? We know institutions can't make 30% like us a day. They have huge orders to put in and take out of the market. And the reason why you say, like you see the market range for periods of times is because they're putting orders into the market or they're taking orders out. They can't afford to move the market yet. And institutions hold positions a little bit longer than one day, maybe a week. And that's where you'll see consolidation on the higher time frames for such a long time. And then we break out. But keep in mind, institutions have thousands of people working for them. A lot of times, we see news releases, and then people say to me, they'll say, well, Ted, how come the news was positive for the US dollar, but it went the other way? It's because they've already worked into the math. They've already done all the analysis. They've done all the work that the government is going to put out. They've done all the calculations. They've run all the scenarios, and they've said basically if it's in between this variance and that variance, there's no real change. This was expected. Institutions will only move the market with price when the actual dollar or the actual news event, that actual idea was unexpected. That's what you have to come to terms with when trading the news. And that's the reason why I tell people, sort of stay away from the news. And everyone posts on social media, oh, look how easy the news trade was. Look how easy this was. Or, like news was negative. So, of course it was going to go up. We don't know that. We don't know exactly why institutions are going to do what they do, but we do know the market's going to move in a direction based on what the institutions believed the news event would happen with the actual currency pair. So a lot of times price is already reacted to the news event, and the news event happens, that's just the end of price moving. So you know what? The only time you're going to get an actual big movement is when it's a large news release or there's a big discrepancy when you actually have the actual versus a forecasted, and the institutions were way off. That's where we get the information. Because at the end of the day, institutions want the best price, and they can always move price to get to where they need to get to. So keep that in mind. So how do we combat this? And it's quite simple: is act like an institution. Don't trade all day. Execute using higher probable frames. High probable times, market opens, specific times during the day. Be aware of certain price levels. You're looking at different price zones, your supplier demand zones, and, support and resistance levels. Be aware when we get to these key price levels, on the higher time frames, that there may be a struggle. We may consolidate for a bit. Looking at a 5-minute time frame and saying we're at resistance really doesn't give you a big picture feel for that. You really want to look at it at the higher time frames, because those, when they break or they retest, that's where you're going to have the most activity from there. At the end of the day too, be patient. Sometimes the market needs time to set up. And at the beginning of the week, we may not see a move. We may see consolidation. And then as we progress through the week, that's where the move actually takes place. So your analysis could be right, but jumping in on a Monday or a Sunday probably is not the best advantage for you as a trader. Maybe you have to wait till Tuesday and Wednesday and take the actual trend. Now that we've broken out and we're moving in that direction, that's the time to take trades. Setting yourself up for success. I think a lot of people want to do this, but they don't actually practice it. So, it's important. When you look at the rules, figure out your trading plan, execute on your trading plan, and just rinse and repeat, right? So, we say this all the time, and people say, well, that's pretty simple. So then I ask, why aren't you profitable? Because you're not following your plan. You don't have a plan. You over leverage your account. You're not following risk management, or you're just chasing. You're chasing a dream. You believe that you should be profitable. You believe you should be making money. You're not actually putting in the effort. You're just telling everybody this is what you should be doing. This is exactly what you are doing to fail. And, when we look at it, it's a very interesting idea, because, when we say, why are we making the same mistakes over and over again? And this is an interesting topic, because as humans, we learn from mistakes, but humans, we always say history repeats itself. So there's an old parable, an old fable about the scorpion and the frog. And when you look at this, if anyone's ever heard about this, you'll understand this. But when you look at what the scorpion and the frog fable is, it's the idea that it's in your nature, okay? And it's something that you have to understand. So when we look at the scorpion and the frog, the fable is the scorpion and the frog were both sitting at the edge of the water. And the frog was going to go across the water, across the river to the other side. And the scorpion turned around and said to the frog, hey, Mr. Frog, I need you to carry me on your back to get across the other side of the river, because I want to go there too. And when you look at that, the frog turns around to the scorpion and says, no, scorpion, you're going to stab me in the back as we try and go across. The scorpion says, no, 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 I need to go across too. So why would I do that? And the frog says, I don't know, but you're going to do that. I'm going to go on my own. And the frog turns around and says, you stay here. I'm going across. Scorpion says, no, I promise that I will go across. We will go across together. I won't stab you in the back. So, they debate. And, it's we turn around and the frog says, okay, Scorpion, jump on my back, let's start going across. So we're going across, and the frog's swimming and Scorpion's on the back, and we get halfway through the river and the Scorpion stabs the frog in the back. And the frog looks at the Scorpion and is like, what the fuck, you told me you weren't going to stab me in the back. And Scorpion's like, I'm sorry, but it's in my nature. You know what, when you look at that and you think about it, when people make mistakes, it's in your nature to make mistakes. It's in your nature that you have a mindset. When you recognize that, that is what is going to help elevate you and what's going to help change what you're trying to do. And maybe the frog didn't say, what the fuck? Maybe that's just my own interpretation of the fable. I'm sorry that people, sometimes it's fun to use those things and change it for more of a PG audience. But, how do we adjust our mentality? And, when you look at that and, how do you change your nature? It's like, am I putting time in to be a successful trader? Am I participating in the groups in both lending knowledge and asking questions? Am I waiting for something to happen, or am I making it happen? And, is my trading plan complete? And am I following my trading plan? Have I mapped out a plan for myself personally? Like, where do I want to be in a month, 6 months, or a year from now? Like, am I objectively looking to see where I can be? And am I being realistic with my approach? If I'm working 10 or 12 hours a day and I'm only studying Forex for 1 hour, I'm not going to be on the same level as someone who doesn't go to work or who's in university or high school or wherever they are, and all they're doing is devoting their time to understanding Forex. So you have to put those kind of ideas into context, and you have to say to yourself, what makes sense for me? And if I understand that there's certain limitations, there's certain things I can't do, how do then I go across and do that? Doing the same thing at the end of the day is hard. Doing it over and over again. We are not built to do things repetitively as humans because we get bored easily. So take away the ego. Nobody says, like Raquel said this as well, nobody says you have to trade full time. Work part time and then trade part time. At least there's going to be a steady income coming in. You don't have stress if you miss a trade one day or you didn't trade that day. You still have income. Maybe you can't trade every day. That's okay. You don't have to worry about trading every day. Maybe you only want to trade 1 or 2 days a week. There's nothing wrong with that. Trading is what you make of it. It's subjective. It's what you believe you want to do. Don't compete with others. We're all here. We're all working for the same thing. Whether you're making $1 or $1 million, progress is progress. And you have to understand that. And let's take a look at, some things here. Understanding the facts. This was an idea that I pulled. And, these are performing funds in Canada. So these are mutual funds, hedge funds, things like that. The top performing funds. Look at the rate of return that they're doing over 1 year, 2 years, 3 years. Do you see anybody doing like 50% returns, 100% returns? You don't. Look at the returns, 19% over a year, 2% over a year, 8% over a year. Do you notice something here? They're happy with those returns. So if you're doing 5% a month, you're doing 10% of a month, like, what is the issue? What is the issue with actually going through this and saying to yourself, hey, if these top professional companies are doing 5 and 10% a year, why is it wrong that I'm only doing 5 or 10% a month? You have to understand that everything has a purpose and everything has a reason. So, you're sitting at home and you're making 5 or 10% a week. You're beating these institutions up huge. What? Because you don't have $1 billion? You'll eventually get to the point where you're making decent money. So why do you want to gamble? Why not just take your time and understand that the biggest institutions in the world are only doing 20% returns a year, maybe. 10% returns a year, maybe. Understand what is going on in the market and where you see yourself and how you can compare yourself to those markets. At the end of the day, what is the hurry? If you need money, get a job. You hate your job, get another one. You don't want to trade. I hear this all the time. People don't want to trade for cheeseburgers. Nobody wants to make $1 or $2 a trade. They want to make Mercedes-Benz money. Everybody wants to make $20,000, $30,000 a trade. But if you can't win the dollars consistently, you're not going to win the tens of thousands of dollars consistently. You have to understand that. And when I say this, next time when you are working through trading and you look at yourself and say, I only made $100 today, and you look at that, document all the hours that you put into Forex, the hours that you did on Saturday, the hours you did on Sunday, and all that extra time, put that all together. And when you see this, you put it into perspective. Pro athletes love what they do. Anyone who has a passion for something, they love what they do. So they're not worried about the dollar because they know the dollar will come. You spent many years in school or, growing up learning things, and you don't have to learn Forex in 2 or 3 months. It's a process. Enjoy the lifestyle change. This is something you want to do. And if you want to do it full time, you have to be realistic and you have to understand that. And, final comment is trading should be done with a clear mindset. And if you're clouding your mind with what you think you should be doing or how you should be doing it, you're just going to end up failing in the end. It's going to hurt yourself. All right. So how do we control ourselves? Essentially, stick to the plan. You have to do this. You have to do this. When you complete your goal, whether positive or negative, shut down MT4 or MT5 for the day. It's quite simple. Just enjoy the rest of your day. If you're having a bad week or a good week, maybe it's time to take time off from trading. Studying and being in front of the markets for every day can be draining mentally. You might not be tired physically, but your mind might be exhausted. You need to give it a break. Because if you don't, it's going to impair your decisions. You're going to overtrade. You're going to create more issues. And, you have to understand that. And remember, every day that you break these rules is another day you're stuck doing the same things you don't want to do. Look at that and look at that very closely. You blow your account today, that means now you've taken 10 steps back instead of 10 steps forward. Keep things in perspective, whether it's you have to write it down in your laptop, put it on your desk, put onto your phone. Make these rules and understand them so that as you move forward, you realize why you're doing what you're doing. Things to remember. Habits take 21 days to form, so you got to be consistent. Reckless trading leads to reckless results. Someone who's making 100% in a day can also lose 100% in a day, so keep that in mind. And treat Forex like a gym routine. You have to make it, you have to determine that it's a lifestyle. You have to put yourself in that position that this is what you want to do and this is going to be part of your life now. Who are you as a person? Do you even make proper financial decisions to begin with? What motivates you as a person? What are your key drivers? Are you a risk taker to begin with? Do you have this understanding that what you want to do or how do you want to do it? Where are you in your life? Are you, early on where you can make big mistakes and recover, or are you maybe later on in your life where you can't afford to make mistakes? Are your goals realistic? Things of that nature. These are things that you have to understand about yourself so that you can get there. And, like I said, failure is an option. So why are you scared to do this? Why are you scared? Failing is good because of the following reasons. It allows you to evaluate mistakes that were made. It provides you with a new roadmap. And at the end of the day, not everybody succeeds on their first time. And I think that's the biggest thing that you have to realize that. And as you progress, each failure, now you take a bit of information from that, and now you fail a little bit less. And I think if you're able to do that as a person, you will continuously progress and you'll eventually get to where you need to be. But if you're going to beat yourself up or doubt yourself, or you're going to look at other people and you're not going to focus on yourself, you're never going to get to where you need to be, because you're always going to be chasing something that doesn't exist for you but exists for somebody else. So I think that was pretty much what I had to say, Rakil. I don't know if you need me to add anything.
Oh, that was a lot of knowledge.
Okay.
Yeah.
That's good to know. Let me give you